The following is brought to you by Timmins Gold Corp. Visit them online at timminsgold.com.
Welcome to Cambridge House Live. I'm Vanessa Collette here at the Sprott Symposium. I'm joined by Frank Holmes, CEO and Chief Investment Strategist at U.S. Global Investors, which also trades on the NASDAQ under the symbol GROW. Welcome, Frank. Nice to see you again.
It's great to be back.
Now, Frank, you're a big fan of following global indicators. What are you seeing right now?
One of the most important indicators when looking at resources as a whole is what they call the Purchasing Manufacturers Index, the PMI. And the PMI is a forecasting tool. It's what's expected or anticipated 6 months out, and each month is updated. It's highly correlated to the demand for demand for commodities. Now, when you look back, it's industrial production. It's important to see where money's actually being spent. So with that, PMIs have turned positive. They were positive, they faltered with Japan in April, in May. Now they've turned positive for the world. That's very powerful for underlying a belly of demand for resources.
And why is that?
Because purchasing manufacturers are basically high-paying jobs to manufacture various goods and products and services. And that means there's global economic trade.
So you're seeing the PMIs rising and recovering globally. Are we seeing a global recovery?
Yes, we are. And it's important. What we like to look at is the 1 month for the global PMI versus the 3 months.
Okay.
So when the average is, the trend is your friend, where the 1 month is above the 3 months, usually the mathematical models say copper's up, oil's up. It's all a part of that global economic activity.
Right. How does this all relate to gold?
Well, gold, it comes to that love trade.
Right.
Because what's so important that took gold in 1900, half of that whole move is the rising in GDP per capita of emerging countries.
Okay.
And they have a cultural affinity to give gold for graduation, for weddings, etc.
So we just kicked off the seasonal love trade in gold,
Yes.
basically. And that continues up until Christmas?
Until Chinese New Year.
Chinese New Year, okay.
So it starts with Ramadan,
Okay.
and then then we have an Indian wedding season, and then we'll go into the season of lights in India. Then we'll have another wedding season. Then we'll have Christmas, and then we'll have Chinese New Year.
Okay, so it carries out all the way until then.
Till February.
Okay, and are you seeing it play out this year? How are you seeing it play out this year compared to other years?
Well, last year there was a big import duty slapped in India to try to everything to slow down gold, and all it did was made gold illegal, and smuggling took place. They've laxed those, and we just witnessed last week 65% increase on a year-over-year basis of gold imports going in India.
I mean, a lot of people have been watching and waiting for this, new prime minister to come in India, and a lot of people have been waiting for him to make reverse this 10% gold import duty. So did we see the change? Is that what you're saying last week? Or has any announcement been made?
There are some making it easier for the banks to facilitate the movement of gold and distribute gold.
Okay.
So that is in place. The exact 5%, 10%, 20%, that's not been in place. But the ability just to move gold.
Right. Now, you said that this year platinum and palladium are your favorites. Are they still your favorite?
They are, because if you have rising PMI, that's highly correlated to car sales. And now we're seeing China with car sales, and now they're imposing North American standards for platinum and palladium to be in cars. So there's a pent-up demand taking place there. And in North America, with the higher energy prices, and the cheapest prices in history to borrow money. You can borrow money inexpensively to buy a brand new car, and it helps offset the higher energy prices because the new cars have much better mileage. They're on 30% more than 12 years ago what a car would deliver.
Right, and with this incredible urbanization happening in China, for example, a lot of people are buying their cars for the first time.
They are.
And more than in the US. Actually, the numbers are higher in China than in the US, or the annual
Correct.
car purchasing.
And as fast as they build highways, they start packing them with cars.
Now, what's going on in South Africa with the strike there?
Well, what we've seen in the past since 2011 is blocks in the supply of any commodity, then we get a big rise in them. So
Okay.
the problems in South Africa are creating a supply situation, a constraint for platinum and palladium. So the two big issues for platinum and palladium is Russia. Putin is a big supplier to the world's palladium, and South Africa is for platinum. And
Okay.
I think that the global economic activity will remain, and that'll basically see platinum palladium trade higher.
And is that why we saw palladium recently hit a 13-year high?
We did. And every time there's problems in Russia, then immediately there can be a supply restriction for palladium.
Now, you've said that you believe people should hold about 10% of gold in their portfolio. Can you elaborate on that a little bit?
Well, looking back in studies, it's just prudent to have insurance. I like to call it portfolio insurance.
Okay.
And it's like car insurance. You don't go and have an accident so you can collect. So you
Yeah.
want to always have gold in your portfolio, and having 10% seems to be just a prudent process. So last year, stock market was vibrant, up spectacularly well. You would have taken profits because gold was down and bought gold at a discount, and year to date, gold has had a wonderful run. So this idea of having 10% helps balance an overall portfolio against currency volatility, and also participates in the huge consumer demand that's taken place in the Middle East, India, and Asia.
Right. Now, are you buying gold right now, or gold stocks? Are you excited about the sector? I think you said that in your sector rotation model, I guess the peak of the last bull market in metals was December 2010, and it's very unusual for any sort of sector to be in longer than 2 or 3 years.
3
So
years.
now in our 4th year.
So it's only 3 times in 30 years where you
Wow.
had gold stocks
Okay.
fall for 3 years in a row. And what took place in 2011, that peak, was GDP globally. We look at GDP as the world, flying at 50,000 feet and watching it rotate and spin. We will see that real global GDP peaked at 5.4% and fell to 3. So if it's fallen almost 50%, guess what's happened to a lot of the metal stocks and even energy stocks? They're off dramatically.
Right.
So you're seeing great value in this space.
So you're seeing a lot of value right now, and maybe some of the companies that are here or that you're looking
Yes,
at right
and
now.
it's not just gold stocks or base metal stocks and copper stocks, which we love. It's also oil. I mean, it's remarkable that oil stocks are priced at where they were when oil was $12 a barrel. It's hard to fathom that.
Right.
And junior oil stocks, they were trading at $120,000 per barrel of oil production. They fell down to $20,000. Now they're back to $30,000. On takeovers, they're at $50,000, $60,000. So I think there's many wonderful small cap energy companies that you see in Colombia in particular. They're going to get bought out because we're seeing these roll-ups. And when the M&A activity takes place, there are 100% lifts in these stock prices.
And what are some of the drivers behind that? I mean, we've looked at some of the drivers behind, gold purchases coming from India and China. What are some of the drivers, I guess, for the oil sector?
Just global GDP.
Okay.
The correlation is so high with PMI, Purchasing Manufacturers Index. Well, it's rising, oil demand picks up. And they're just not finding enough production to come on stream. And in particular, in North America, we've been blessed with fracking as an innovative process, but they do not have this in Russia or Eastern Europe. And they've done everything, Russia's done everything to try to stop and prevent. One of the biggest funders for anti-fracking comes from Putin's regime, comes from Gazprom. And they've been sponsoring movies. And same thing with Qatar. They've been sponsoring this sort of disinformation on fracking because it impacts their sales.
Right. Well, yeah, and Gazprom has all of Europe kind of dependent on it. So,
But let's say America, like say Canada, has cheap gas prices. It makes oil sands more attractive. Also chemical companies, because to make chemicals, you need gas as an input, and then you have refineries. So the input of natural gas being so inexpensive relative to Europe is helping boom. And so last year we saw refineries up 70%. The year before up 60%. So there are these wonderful pockets of opportunity.
Okay, so that's where you're seeing a lot of opportunity right now. Excellent. Well, thank you so much for joining us again, Frank. It was great having you here.
It's great being with you, and hopefully everyone's buying some of that nice gold jewelry for that love trade.
Fantastic.